Everyone, thank you for joining the spaces. We will wait few more minutes and for more people to join. We already have our guest in the spaces. We will make them a speaker and then we will start. Meanwhile, I do that. I would like to introduce everyone here with the MetaPath. So MetaPath is a Web3 aggregator which aggregates everything around Web3. So it aggregates cryptocurrencies, NFTs, metaverse assets, gaming assets, and combines them into one place. So you could do multiple things with each of them combining. So we have a swap which allows you to swap over 400 different cryptocurrencies over 40 plus different public blockchains. We have an NFT marketplace which allows you to buy NFTs from six different blockchains with any currency that you have. So let's say if you have ETH and you want to buy an NFT on Solana, you can do that. If you have Solana token, Sol token, and you want to buy an NFT on ETH, or you want to buy a Board API Club NFT or something like that, you can do that with MetaPath. We also have few AI products, so you can go onto our website and find your ideal NFT collection based on the inputs that you have put in there. You can do some research as well. If you are using ChatGPT Pro, you can use MetaPath plugin to basically do some research around NFTs and Web3 in general. So that's our basic intro about MetaPath. We have our guest over here. We have Lionel from TrakX. Hey, Lionel, how are you doing?
Hi, I'm good. Yourself? Hi, everyone.
I'm good. I'm good. We can hear you clear, so that's all
Perfect.
good. Now, Lionel, before we talk about TrakX, I would love to hear more about yourself. What is your background? How did you uh, join Web3, and how did you come to be the CEO of TrakX?
Yeah, sure. So, yeah, I have a background in traditional finance, like quite a few people in the space. So I used to be a desk analyst, trader, then a portfolio manager on a bunch of instruments, mostly debt, then equity, then a mix of both. That was at a professional level. At a personal level, I was quite interested in the blockchain technology at first, and then I started to look at the asset class itself. I didn't make the connection at the beginning, and then I thought, the learning curve is incredibly steep. It's very exciting, but it's hard to connect the dots. And then I started to dig into it much more closely about 7 years ago. And at the personal level, I say that I've always wanted to be on the other side. Like I used to be an investor, and I thought, let's create something at some point. It could be on, any asset class, any sector, whatever. And then this idea came up because I saw, it was to me the biggest macro trend I've ever seen in my career. So I thought, it was an obvious move for me to create something around that.
Awesome. It's great to hear that you were in a traditional finance. You were already doing big things over there, but then you saw the industry and how impactful this can be, and you joined. So thank you so much for being in the space and creating such good products for us. Now let's dive into TrakX and what you guys are building over there. So what was the inspiration behind the creation of TrakX? And so it's a crypto trading platform. And how does
Mhm.
TrakX differentiate from other crypto trading platforms?
Yeah, sure. So I mean, stop me if you need more detail or less details, but at a high level, basically, our vision was that in the long term, crypto assets, and notably, those who are linked to real economy assets, will be part of, any investor's portfolio because of, for various reasons. But our view as well was that at the same time, in the short term, there's still too many frictions and too many barriers to entries we need to get rid of for this asset class to get properly democratized. So, well, in a nutshell, our mission is to offer an access to crypto assets, which is not only simple, but also safe and strictly compliant from a regulatory standpoint. So we built basically our offering based on those three pillars: so simple access, and safety net, and compliance. So on the access itself, why we decided to build what we call CTIs, which are effectively tradable indices, a bit akin to what broadly speaking as ETF. So it's baskets, to put things very simply, which put together a bunch of crypto assets, and they tend to be thematic baskets. And the advantage those baskets have, or indices have, is that you don't have to do stock picking. Basically, it's a very wealthy asset class with a lot of different narrative, different laterals, and it's hard to do stock picking. Of course, you can do stock picking, and of course, encourage, and I do it myself, to do stock picking when you have a strong view on this or that token. But generally speaking, when you think about it, people have more of a sort of a macro approach, like a thematic approach. So, and in that, indices are quite a good way to get exposed to something we like. And then there's diversification, there's rebalancing, so you don't have to worry about managing your portfolio too actively. It's done automatically. And also, even if you can do it yourself, which is fair enough, when you're an active trader, you can go on tens of platforms and trade it. It's still quite time consuming. And you need to have access to plenty of platforms. So so this the CTIs, to us, to come back to my first point, was probably one of the best ways, if not the best way, to get exposed to an asset class without the hassles that come with it. But in itself, it's probably not enough. So you have the product, which is core to our business, but also the distribution channels are as key, I'd say. You need to have a simplified access to those products. Hence, the idea to create our own platform, which, to be clear, is not meant to compete against guys like Coinbase or Binance. I'd say we're dead in advance if we wanted to go that path. The idea of the platform is really to facilitate the onboarding of the clients, facilitate the on-ramp, the exchange of our own products, and nothing else. So, that's I'd say a very different approach from traditional exchanges. How do we differentiate ourselves? Clearly, I just said we're not. We have an exchange. We're not an exchange. It's completely different. Our core product, again, are the CTI, so the indices. The exchange itself is only the tip of the iceberg, again, which enables us to onboard clients, facilitate the exchange of our own product. But how do we differentiate from the crowd is really by covering the whole value chain, and not just being an exchange, or not focusing only on creating and managing the CTIs. We do the whole thing end to end, from the conception of the product to their launch, and also we manage the whole life cycle in the secondary market. So basically, we cover the whole thing, and I'd say that's probably the key differentiating factor. The fact that we cover the whole value chain enables us to monetize the business in different ways. We can play with management fees, trading fees, depending on where the volume is or the interest is. We can also have an unbeatable time to market. We can launch a new product in literally a couple of hours. We control the downstream, so we can test and iterate on the product launches until we find the best product market fit. So I think that's really the key differentiating factor.
Awesome. Thank you so much for that answer. Now, there is something called CTI, Crypto Tradable Index. Can you please explain what it is and what was the process behind creating it? Now, please go ahead.
So CTIs, like you said, so crypto tradable indices. So again, it's very close conceptually to ETFs, except that the instruments are different. We're talking about token here as opposed to shares in the case of ETFs, but conceptually it's the same. So the way it works is before we launch something, we we do cover the index sort of providing business, as we call them. So we select the underlying assets. So say we decide to go for, I don't know, we launched recently, say the memes CTI. So we're gonna look at all the memes token that fit certain criteria, which are essentially criteria on market cap and criteria on real liquidity. So once we do that, once we've selected the eligible assets, then they go through what we call the index manager, which is our proprietary tool, basically to manage the whole life cycle of the product. And then the index manager will define basically what weight should each of those tokens have in the CTI. And then we list this product on the TrakX platform. And then we have trading bots, basically, which make markets and basically enable to have 24/7 liquidity on those products. So that's how we create and manage the CTIs. It's essentially through the so-called index manager tool that we developed in-house.
Awesome. Thank you so much. Now, when you are managing the funds of investors, or when you, so uh, we all know that cryptocurrency is a volatile market, even though we are in one of the biggest bull runs at the moment. But it is still a volatile market. How do you guys manage the risk and ensure the security of investors' assets?
Yeah, I mean, yeah, there's obviously the tech side where we invested heavily over the past 4 years plus, I'd say, with an impressive development team. So there's, authentication, blah, blah. But there, in terms of the product themselves and by design, we always wanted to make sure that one, they are scalable, and two, we remove all the counterparty risks that we can on the value chain. So effectively, all those CTIs are what we call asset backed. So whenever you invest $1 in one of those CTIs, we deploy simultaneously the same dollar to buy all the underlying assets. But then what's very important to bear in mind, and that's probably another key differentiating factor versus the other exchanges, if you look at us just as an exchange, is we put those assets on segregated accounts, and we don't do anything stupid with it. Basically, we can't what we call hypothecate these assets, so we can't lend them or do anything like this. We don't do leverage, we don't do derivative products, we only do spot. So it's a plain vanilla sort of approach that we have. I'd say, we have a very, very conservative risk management approach. If you want leverage and, we're not the right place, but if you just want to get exposed basically to a thing you like, you don't want to, go through the hassles of, stock picking and or trading on God knows how many platforms, and to take the risk, counterparty risk on those platforms, then we're the right place to go, basically. So that's we don't keep, I mean, really the bottom line of the bottom line is we try to remove the counterparty risk wherever we can, so that our investors can sleep not well but better at night. It's still volatile asset class, but that the investors should be focused on this only, not the infrastructure which we take care of.
Awesome. Thank you so much. Now, see, so we speak with a lot of people, and there is a lot of talk about compliance. There is a lot of talk about regulations. But
Mhm.
TrakX is, I think, in unique in this way, where I have seen you being registered with uh, AMF and ACPR in France
Mhm.
as a virtual asset service provider. So that's really intriguing to me, because you guys are, registered, and you guys must be filing forms with them, must be providing some information to make sure that you are compliant with that. So how does that compliance impact your operation? And What would you say? What kind of benefit does that compliance provide to the end user?
Yeah, no, you're right in saying, I mean, at the very beginning, when we first launched the project, it was absolutely clear in our mind that, part of the offering that we have is built around the third pillar, which I mentioned, which is compliance. I think, it makes people, is by itself not an end in itself, but I'd say it tends to reassure quite a bit your clients. So, for us, it was a no-go to go like to go without all the necessary registrations. So that's why very much almost over 3 years ago, actually, we secured that, and it took us about almost 2 years to secure it. It was absolutely key to get those registrations, and we were in fact the first one to have the full registration. So one for the trading platform, but also for the custody, fiat to crypto, and OTC business. So that was absolutely important to us, even crucial. But having said that, like you said, it comes with a lot of it's very time consuming. I mean, put it this way, for good reasons. To be honest, the regulators tend to ask the right questions, I'd say, overall. Sometimes some might be a bit overzealous, but for the most part, I'd say it's really here to protect the interest of investors, which is a good thing. But for us as a company, yes, it creates a lot of operational headache, because we have to track anything that's happening, obviously, with MICA, with the travel rule, with market abuse. We have to track the FAFT recommendations, everything that it's a very dense, I'd say, topic. So it takes a lot of bandwidth. But it's and also it creates some friction. To come back to your second part of the question, to give you some rough numbers, and I think we're pretty much in line with our peers there. We basically have about 75% of the potential clients who give up along the way because of the KYC ML processes, although we streamlined it as much as possible. And frankly, it takes like only a couple of minutes if there's no red flags. Still, 75% of the users give up along the way, be it because it's too intrusive or because they don't fit certain criteria. So in that sense, I'd say yes, it can be quite unbeneficial to our business. But the flip side, again, to be clear, is I clearly see the value that the fact that we're registered, it gives some comfort to our users that we won't do anything stupid. So of course there's reputational risk. I mean, we have a very good strategy committee and very good experienced team, which which is worth a lot, but it's in itself is not enough, I'd say. So the regulation was absolutely necessary for us to reassure our clients, and overall, I'd say it's quite paying off.
Awesome. Thank you so much for that answer. Now, what future developments can users and investors can expect from TrakX? Are there any new CTIs or features that you are currently developing?
Yeah, I mean, we keep building like literally all, I mean, like all the time. So, yeah, in terms of strategy, I mean, we want to open ourselves up to the rest of the world on both sides. So, on the one hand, we're going to start shipping our products across different distribution channels through partnerships, and conversely, we're going to list potentially some products developed, or algorithms, I'd say, developed by third parties. So partnership is one key thing. RWA as well. I mean, everybody talks about real world assets, but for us, it's always been the end game. We're starting with native crypto assets because there's a lot of very interesting attributes. But at the end of the day, the addressable market for real assets is infinitely larger than what we currently know. geographic expansion is another thing. Right now, we've been very much focused on in the French market and European market in general, but there are some very interesting markets for us, like the UAE and Asia, to name but a few, where there's some appetite for both indices and crypto assets. So we're really at the crossroads, which is very interesting for us. In terms of products themselves, we've launched over the past months or so, we've launched quite a few products. We launched the AI CTI, the DEPIN CTI, IRWA, memes, gaming. We launched like a couple of days ago the Momentum product, which is a risk on, risk off. So it's more like I'd say more sophisticated product. And what's coming, we have tokenized T-bill. Like I said, I think RWA is really the big thing that we want to address, and we're just starting with its tokenized T-bill. And we're also working on much more advanced, I'd say, smart beta products. So yeah, there's quite a few things in the pipe in terms of products, and then in terms of features as well. We're gonna start working on a DCA solution. We're going to fine tune the on-ramp. We're going to enable also deposit via different chains, possibly of different kind of stable coins. Yeah, there's a lot of things in the pipe. Very exciting stuff.
Awesome. Thank you so much for that answer. Now, let's talk about what kind of challenges that you are facing. So, what are some of the biggest challenges that you are facing in the current market, and what are the things that you are working towards to face those challenges or overcome them?
Yep. Yeah, I'd say there are obviously some systemic risks which we can't control. So, but there are some ways for us to mitigate these risks. Like, typically one of the biggest ones is, exchange risk. It can be, any big name that we all know. In my mind, it's always been a genuine risk. I mean, it's easier to say post FTX, but we've always had this cautious approach. And to come back to your question on risk management, it's absolutely crucial for us not to be overly exposed to any of these exchanges. So the way we mitigate this risk is simply by moving the assets. Whenever we trade on those platforms, we move the assets.
This space was downloaded via spacesdown.com. Visit to download your spaces today.
Back to custodian in segregated accounts. So that's one systemic risk, I'd say. Then there's regulation. Obviously, it's another systemic thing, and we've heard like the news that the SEC might want to qualify ETH as a security, in which case it would have quite a few ramifications. And the way obviously we try to stay ahead of all these kind of things, but it's not always easy because the regulatory framework tends to change quite rapidly because they try to basically follow the pace at which we have technological changes too. So it's I'd say that's another risk. The stablecoin risk as well, and that's why, by the way, we only trade against USDC. We only let customers deposit USDCs. For now, we've always been much more comfortable with this one than many other stablecoins. So yeah, I'd say there's a lot of systemic risks. So on the exchanges, on the regulatory front, on the stablecoins. Yeah, and then on the data, there's also arguably some risks, especially since we deal with some mid and small caps by virtue of offering sometimes some themes which don't necessarily only have very large liquid tokens. So that's why we use effectively 3 or 4 data providers, and we treat the data, as many times as much as possible. So that's another risk for us because our trading bot trade on the back of what come out of this data. So we need to make sure that they are of the best quality. And as we all know, unfortunately in this market, the data quality is not quite there yet. So that's another risk for us, I'd say.
Thank you so much for sharing that and being so open about challenges and risk. Usually, when we ask such questions, founders and CEOs don't really answer them and they just, go around it. But thank you so much for being precise and
No,
being.
there are plenty of risk, and I say, that's also our opportunity, because if there were no risk, people wouldn't need solutions like ours. No, there are still plenty of. I mean, I think it's it's really hard to hide. Honestly, it's still a nascent industry. So it's been around for only a couple of years. A lot of things have been built over the past couple of years, but we're still missing. We still need to fill some gaps. Until then, you have to just, one, identify those risks, and two, see how you can best address them until everything is sorted out.
Yeah, 100%. Now, see, the stock market has been around for a very long time. ETFs have been around for a long time as well.
Yep.
And, after years of education, people were able to now understand them well. And I don't think like people really understand them, but yet they kind of understand them. So so when you are introducing like CIT, crypto index trading, or CTI. Sorry, I think I'm
Yeah,
for them.
no worries.
Yeah,
Yep.
CTI, right? So how do you plan to like educate and engage users with this index? How do you plan to like teach them what it is and onboard them onto your platform?
Yeah, so we do a lot of education, as you'd expect. Don't get me wrong, not in a bad way, but education in that we try to train people with the knowledge we have, because like I said, the learning curve, to be fair, is incredibly steep, and all of us here, even with who've been around for years, there are still a lot of things that are not clear. So to be fair to those who don't look at this market, it might be a nightmare, and I can understand why you don't want to start, because it feels like overwhelming. You have too many things to try and understand. So practically how we do that, so we organize quite a few webinars. We organize quite a few physical meetings as well on several topics. Typically, we're still at the stage where we feel like it's better to address the one-on-one, like the basics. So it can be as simple as what's Bitcoin or what is, and what are the key drivers behind it, and how they differ, and what's an altcoin, a stable coin, CBDC, this kind of what's the link with the technology. So we're still at a stage where we can't go to brutal and go to technical, otherwise we lose the public. So I think it's good to try and explain in very simple terms all these kind of concepts. So we do this through again webinar. We do it through conferences. We do it through private meetings. And we start also communicating more and more through social media, and we also start using some what we call free influencers, basically, so kind of influencers, but specialized in investing and trading. So that's really the only way to go. I think it's really to take it easy at the beginning and explain the basics, and also link it to our own product, how they can help navigating through all this complicated space, by getting exposed in a seamless manner to certain thematics. So yeah, that's how we tend to approach it.
So, one thing that I think I saw is you have introduced ESG focused crypto indices.
Yep.
Now, what was the reason for that, and how does that work? see, I'm very new at
Mhm.
this, at all the ESG stuff, like environmental, social, and governance. I know they're that kind, but could you like please educate me, like why are you doing ESG focused crypto indices, and how are you doing?
Yeah, no, yeah, it was indeed the first ESG product to be launched in the market. So, and it was reborn out of natural demand, which we received from some investors, mostly it's a semi-institutional investors who have strict mandates and can't invest in what they don't think is ESG friendly enough. So that's how it was born. Really, it's to satisfy this kind of demands, mostly because I mean, as most people know, it's easy for an outsider who doesn't look at the situation very closely to think that Bitcoin is quite dirty in the way people mine it, blah blah. I mean, although there's kinds of counter arguments to say no, it's not necessarily the case, or there are ways to mitigate that. But the reality is, you can't make the same reproaches to say proof of stake tokens. So to start with, in the ESG, we have mostly proof of stake tokens. So that's for the environmental side, but it's not the only criteria. I mean, we use several providers for this, but it's not the only criteria to classify what's environmental friendly or not. And then the other two letters that people tend to forget, which I think are as much powerful, if not much more powerful than the E. The E should be a box that one should tick and say, okay, this is clean, done. But then, what really has an impact is the S and the G. So the social impact, it can be as stupid as investing through DeFi protocols. I mean, it's when you think about it, like. Okay, in the Western world, people tend to be banked, have access to financial products, and so on. But it's not true in a variety of countries. So the fact that some now have access to this kind of financial products, it has a genuine social impact. So the S is quite important, and so is the G. I think the G, the governance, is really at the epicenter of the whole thing. On That's what, in my mind, blockchain is all about. Is governance. Everybody talks about single point of failure. Everybody talks about centralization of powers and everything. G, the governance, is what defines everything in the blockchain. It's really at the epicenter. So, I think there's a lot of, the ESG sort of focus will grow over time as as the asset class goes much more mainstream. And we thought launching such a product was potentially of interest to some investors.
Awesome, thank you so much. Now, see one thing that we at MetaPath we like to do is we want to make our product user friendly. Everything that we are doing at the end has to be user friendly.
Mm-hmm.
People has to be able to understand what they are doing. So, and we are a Web3 native protocol. So, users that we have are have most likely used some sort of applications previously. But
Mm-hmm.
with TrakX, I feel you will be onboarding a lot of new users to the space as well. So, how do you ensure a user friendly experience for both crypto traders and newcomers, uh, especially when this whole index trading, just the concept of index trading
Mm-hmm.
is so complex.
Yeah, that's a super good question, actually. So that's first we have a simple and an advanced sort of trading page, the asset page, and the sort of orders page is common, but the trading page, we have the simple and we have the detailed approach. So on the detail, you have the usual stuffs like the depth of the order book, the trades, and so on. On the simple one, it's you see a chart and the price. Um, having said that, you're right. I mean, in a way, we're just starting to see, we just started to go a bit more retail like about a year ago or so, and we already collected like countless number of very useful and valuable feedbacks, and this is one of them. Definitely, we need to simplify it even further. What seemed to be sort of simple enough is actually already too complicated for the guys who are just starting. So the way we fill this gap until we launch an even simpler interface is we do manage accounts. So for them, they basically get exposed to those products without having even to connect themselves onto the platform. And we also launched some certificates which wrap them legally and basically are distributed through the traditional channels. So that's how we address that. But on the platform itself, yes, it needs to be even further simplified. The other point of friction that we need to address is the on-ramp. So we use an existing solution, but there's still some friction which we need to basically get rid of. So we need to improve that. The other point that we need to improve is also the possibility to deposit via different chains, because for the slightly more advanced traders, they can deposit USDC without any problem. But when you want to deposit like a small amount and the gas fees are whatever $50, you might be deterred from doing so. So we need to add some different chains, which we're working on. And I'd say the last point also that keeps coming back is the ability to DCA. So the last dollar cost average, for those who don't know, basically it's you invest on a regular basis constant amounts of money, and you buy whatever the market does, and that's a feature that's becoming very common, that we need to add to satisfy the more sort of retail side. So yeah,
Thank you,
it's not just
Neil.
UI. It's I'd say it's more UX, user experience, than UI itself. That's important
Yeah.
to go mainstream.
Yeah, thank you so much for that answer, Lionel. Now, see, it has been great hearing from you, and we really loved all the education that you have provided us. We really appreciate you coming on here and spending some time with us. Now, before I go and check if we have any community questions. I have one more question from my side, and then we will go and see the community questions. So, in light of increasing, security breaches, we are seeing more and more security issues every day in the space. I think both security issues and scam have risen drastically in last few years in this space. What are some of the measures that you are taking to safeguard investors' asset and the personal information?
Yeah, so on the personal information, we moved, and it was a big project for us because we had to move all the databases, but all the authentication system. So we moved to Auth0, which I think is by far the most secure way for authentication purposes. So we impose also 2FAs, of course, and only via authentication apps. So we avoid all the other kind of easier way to do a 2FA. So that's one thing. We don't for GDPR reasons as well. We don't share all the kind of information. They are safeguarded in specific places. Then in terms of the assets themselves, like I said, we have created segregated accounts. I'd say not even for regulatory purposes, but just for our users' peace of mind. So we created some segregated accounts where we put the client's assets, and we have super strict rules. We tend to be a bit sometimes even too crazy about it, like to the point that it creates some operational headaches for us. But we can't move the assets under a lot of different conditions, so that nobody can run away with the money, basically, as it has happened with with FTX or a similar example somewhere else. So we're super mega strict about it. So and also, like I said, we don't hypothecate the client's assets, so we can't. It would be a nice way for us to monetize it, but we don't do it because, again, part of the value proposition is we don't do anything stupid with those assets, so we don't let them. Everything is custodied, everything is fully asset backed. So yeah, I mean that's really the key focus for us. On the authentication side, like I said, yes, there were many more risks before because we had several systems, but we unified everything under Auth0, which is our only provider now, and they have super sort of a safe environment. And also internally, maybe internally, we're also crazy about who can have access to what. Even the support team, I mean, at the end of the day, there's only 3 guys who end up doing the most sensible things. All the sensible information about our clients, be it financial or else, can't be seen by most people internally at TrakX. So we take it very seriously indeed.
Awesome. Thank you so much. Now, I found one question in the comment section. I feel is really interesting to me as well. So, how do you guys select the cryptocurrencies that you use, that you put in the different baskets? So, like, what's the process for that? Who does that? And yeah, just that, I think.
Yeah, so yeah, we get the team. I mean, ex financial guys too, I'm afraid, but working at Bloomberg and similar places, managing the index business there. So quite frankly, we mostly started off the methodology that were used there, and we transposed that to crypto assets. Then there's a lot of specificities to crypto assets. Then what do you do when there's a fork or when there's this or that event? But for the most part, like in terms of selection of the eligible universe, so we start off like the whole universe, and then we narrow it down by minimum market cap. Overall, it tends to be at least 500 million of market cap. We do at the margin some under very specific criteria, we do some exceptions, but it's a 500 million minimum market cap. And actually on that, we work a bit on the circulating supply, because we look at the circulating market cap to be precise. Then the most important metric in my mind is the real liquidity. So we look at the trading volume on specific exchanges where we know they don't manipulate prices, and where we know we can execute the trades if we want and have to. So that's the second key criteria. Once it and it can't be zero knowledge proof stuff either for regulatory purposes, and we also exclude, of course, stable coins. And then once we have like an eligible universe, and then we have sectors. We classify each and every token in the eligible universe by sector. So sectors being like whatever, RWA, NFT, metaverse, DeFi, blah blah. And then from that, we put it in the system, and it gives us all the underlying assets that are eligible to go into a specific CTI, and then which weight each of those underlying assets should have in the CTI, and those weights are typically a function of the market cap, bearing in mind though that we cap the weight that any constituent can have, so that we can diversify the basket. So it can't be, we can't have one one constituent that represents more than 30% of a CTI. So that's how we do. And on a monthly basis, we rebalance. We do what we call the rebalancing. So we check whether all these criteria are still met, and if not, we do the changes accordingly. And at the margin, we might have some internal discussions on the selection of this or that assets. It's mostly for regulatory purposes, I'd say, like when there were question marks around the Ripple on their qualification and so on. But for the most part, it's a non-discretionary, systematic approach. We just follow strict methodology.
Awesome, Lionel. Thank you so much for coming here. We really loved hearing from you. So
Pleasure.
yeah, thank you so much for coming and joining the spaces. Uh, yeah, that's it from my side. Do you have anything, any words for the community before we end the spaces?
No, thanks a lot to everyone for attending. I hope everything was clear. I mean, the team is always here. If you have any questions, feel free. And of course, we'd love to welcome you on the platform. So, if you want to register, and also equally importantly, give us any feedback you may have, especially the negative ones, because we're in this phase where there's still a lot of room for improvement. So please come on board yourself on the platform, trade even small amounts, and give us some whatever feedback. Thanks a lot.
Thank you everyone for joining us here. Thank you for listening to this. If you're listening over here or later on YouTube, thank you so much. We try to do this spaces every week. So we will see you next week. Until then, have a good weekend and rest of your day. Thank you,
Thank you.
Lionel. See you.
Thanks. Bye-bye. Cheers. Bye.
This space was downloaded via spacesdown.com. Visit to download your spaces today.